following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe there's a great power silently working all things for good. Behave yourself and never mind the rest. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 36, NASDAQ down 2, S&P's up 450, gold contract down $9.40, traded 1,124 an ounce. Silver down 2 cents at $14.66 an ounce. Platinum down 9 at $1,005 an ounce. Copper up 4 pennies at $2.37 a pound. Light sweet crude up 42 cents, trading at $46.66 a barrel. Bonds, we have the 10-year up 8 ticks, 127.13. 30 up 17 ticks at 154.17. King dollar's up 516 ticks. Excuse me, folks. Trading out at 96.36. Euro is down 102 ticks at 111, and the yen is down a half a penny at 119.94. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Wait till you see this, folks. We got a major failure here, okay? And we're taking a look at this market out here. What you're going to see is this. The Dow Industrials out here today, well, the market in general, okay, was up and was up good. The Dow was up 200 points. Now you're up 29 points. And what has the market done? Well, we'll start with the S&Ps. We'll put the SPY up here so you can see how this baby, and this is a classic, by the way, folks. When I say a classic, it's a classic how markets go south, huge volume on the way south, you do a counter trend bounce, come back down, do another bounce, can't handle it, and this is what you have. So if we take a look at the SPY right now is trading at 195.84. Now, the last high that was established out here, you know, which was on the 28th, we had gone up, and you had gone up with 160 million shares. You know, we had first got smacked down on the 24th, 25th you're down. Couple days you're up, and you're up good. We come back down, and we come back down once again on Tuesday. We come down hard. We come down hard. We come down with 256 million shares. Now, yesterday, expansion topside again. What do? You go up with 160 million. Now, the 160 million was going into 333 as well as 274. What do you do out here today? It's just wild. You run up, the SPY ran up to a price point of 198.05. We're going to do maybe about 120 million shares. The 120 million is going into 274. And then on top of that, which is pretty intense, folks, is that you're going to fail not only on price and not only in volume, but it looks like you're not even going to be able to hold the highs of yesterday, which is just a mind blower. Because, you know, the highs of yesterday in the SPY, right now we're at 195.76. The high of yesterday is 195.46. Bottom line, what I expect you're going to see here is that coming into the close, it's going to be a sell-off. Now, let's go over and take a look at the NDX 100. And by the way, it's the NDX 100, folks, that is taking this baby south. Well, of course, it's selling that takes it south. But you got to remember, we start programming at 8 o'clock in the morning. We go from 8 to 6. This morning, on my own program from 10 to 11, it was really wild. Well, actually, it was really wild when I woke up this morning because, you know, in these days, folks, you're trading at night, you're trading in the morning, you're trading the whole time when you actually get your head wrapped around it. And what was so intriguing, I'm saying to myself, man, how is the S&Ps up almost 16 points and the NQs are only up 20? That was so whacked out, it was unbelievable, because when the S&Ps are up 20, folks, the NQs are up about 65, okay? And the NQs are just the NASDAQ futures. Bottom line is that you had that differential this morning starting out. Well, that differential just got heavier and heavier. The NQs, I'll put the, well, here, I'll do the Qs for you first, because most people definitely trade in the Qs. So what do the Qs do? The NDX 100, the Qs, they went to a price point out here today of 105.02. We're going to do, this is really crazy. We did 12 million shares, folks, in the first hour. And right now we're only at 33 million. So the bottom line is they're not going to have the juice. We went to 105.02. Right now you're at 103.77. The high of yesterday was 103.92. So it's not even going to hold the high of yesterday. Okay, so what does that set up? Well, it sets up that you're going to now go after the lows that were established yesterday. That's how this whole, well, actually not yesterday, the lows that were established on Tuesday. That's where we're going to go. What's going to be so intriguing about this is that this is going into the Labor Day weekend. Get a jobs number out here tomorrow. Not that I think the jobs number is going to be bad. Bottom line is that whatever it is, basically the market wants to sell off. We go take a look, and I put the NQs up for you, and you'll be able to see that the NASDAQ futures themselves, how they have been screaming, because they have already got into the bar of yesterday. The NASDAQ futures got to a price point of 43.04. That spike that we had this morning, we had the spike when Draghi, the European Central Bank, came out and said, listen, quantitative easing is going to stay on till at least December of 2016 in Europe. And what we're going to do is that we're going to, thus far, folks, there's not a lot of bonds in Europe compared to how many there are in the United States. So they were buying 25% of just about every issue out there. They upped that they can buy 33%. Bottom line, our market spiked. NQs spiked at 43.04. Right now, you're at 42.44. The high of yesterday and the close of yesterday was 42.63. Bottom line, that is setting up that's going to go after the Tuesday low again, which is 4118. Gold contract. What do we have with gold? This is what you have with gold. Bottom line, gold held. It would have been nice to see a total rejection of price. We didn't get to the swing point. We're at 1124 right now. We've done 101,000 contracts. That is going against 205,000. 207,000. So bottom line, you're going to need more than that to whack it down. Now, dollar index. Okay, so check this out. The dollar index has strength out here today. What the dollar index has done is that dollar index is trading at a price point of 96.55. You stay right there, folks. We're going to come back and we'll bisect and dissect that dollar index for you. Dow Industrials right now are up 49. Nasdaq's up 6. S&Ps are... No, Nasdaq's flat. S&Ps are up 6. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And when we talk the dollar, folks, we're talking the dollar index. And now this is what the index has done. You know, so you had some juice inside the index today. We've done 54,000 contracts. The number to keep your eye on to come into this close is 96.35. The amazing part is that it hasn't been able to hold that number. You can't hold that number. That's not even the major swing. That's the minor swing when we were up there on the 28th. Couldn't hold it then. If you can't hold it, that number, bottom line is that's going to say you're going to pull back into this 95.21 again, and we'll see where that shakes and bakes. But the dollar should have been able to hold that number. We got another hour to see if, in fact, it will hold that number. Now, folks, let's go over to our man, Mr. Andy Heck. And don't forget, at TFNN, 8 o'clock in the morning to 6 in the evening, get it right on your cell phone, live programming, TFNN.mobi. That gets you the audio. Video, just go to TFNN.com, right in your cell phone, right-hand side, hit that banner. Andy has a great show every Tuesday and Thursday, right after my show's over, 5 to 6 Eastern Standard Time. Also, has a great newsletter. It's the Technomento Commodity Report. You can test drive that right here, right now. 30 days, absolutely free. Andy Heck, what's going on?
Hey, Tom. How are you?
How you doing, man?
I'm good. I'm looking forward to Labor Day weekend.
Yeah.
And I think the markets are looking forward to Labor Day weekend. They need a break.
They need a break? Why do they need a break?
They need a break. Are you kidding? Well, they need a break. China needed a break, and now the U.S. market needs a break.
Yeah, you know, it's interesting, folks. There's no doubt with China needing a break, it's not even helping our market. So it's going to be amazing what they're going to blame this on now.
Oh, I don't see. You know, whatever happens the rest of today, I think tomorrow will be a really quiet day. I think next week is going to be fireworks. You know, Mario Draghi gave the dollar a lot of upside ammo today in his comments. Did you see those? I
definitely did. I was sitting in front of the screen trading. Yeah.
Yeah. Draghi definitely. I think. Listen, they're jacking up the QE over there. And the economic situation in Europe is lousy. And you know what, Tom? This horrible humanitarian problem that's going on now in Hungary and in Germany with these immigrants, this is very negative for the European economy that's going to be diluted. They really don't have a handle on it. And this is really problematic for that whole area. I mean, this is all, to me, a very fundamentally sound reasons that the dollar index is going to move higher. This is, what's going on over in Europe.
I fundamentally, it would make that the dollar should be to the moon. Technically, guess what? It can't handle even the minor swing point, never mind a major swing point. So someone's selling it.
I hear you. I want to see what it does technically next week. This is a lot of people are out, a lot of vacation time. I'm looking at volume in the dollar index today. If under 58,000 contracts, even open interest is low.
But the dollar index hardly ever does 58,000, Andy.
Well, on a big day, Tom. On a big day, it does 150,000.
That's done that a few times. I mean, it's only done that a few times in years.
Right. I understand. Yeah. The bottom line on the dollar is that, technically you could be right for a week, a couple of days, whatever. I think fundamentals over the long run rule currencies. And fundamentally, I see new highs in the dollar coming. Anyway, a couple of other things.
Copper. Talk to me about copper.
Yeah, copper kind of blasted off today. I mean, in thin market with China closed, it feels manipulated, actually.
Well, what's interesting about this is that, look at the day. It looks to me like it's off this bottom, and the reason I'm saying that, I didn't see this on the 27th and 28th, but man, there's some juice on that, the 27th and 28th.
Yeah, I mean, copper could get up to 250 or 260, but don't forget to sell it when it gets there. Because, it's all about China. Yeah, I mean, the copper needs a relief rally, no question. And 250, 260 is not out of the question, but it will trade $2. I mean, it's all about China, and China's weak. And, that's turning the Chinese economy is like turning the biggest ocean liner in the sea. It doesn't turn on a dime. And that government.
There's no doubt about that.
Right. And copper is the most sensitive in terms of that. The one thing, lumber made a new low today. So, and oil's up, has bounced. Copper is kind of following oil, not to the same extent. Oil's insane. I mean, we talked about that on Tuesday. Oil is like riding a psychotic horse to a burning barn.
Well, it's going to get interesting. Let's talk about this for a second, because I know, when I had done a workshop last month, I was saying to folks, for my own subscribers, you got to watch ExxonMobil. And so I'd like to just run through this, because the oil market out here today, folks, okay, so check out what it did. You had that expansion, off the bottom. We went from a price point of $37, up to 49. And, it looks to me like today, guess what? It's going to give up the ghost. It's going to run back into this, I don't know, it could even run back down to $40, man, 47.
Oh, yeah.
Which is going to be wild. So if we go over to ExxonMobil and we take a look at ExxonMobil, it's the same type of setup, folks. I would let ExxonMobil come all the way back down into this 71.44 area, because it came off the lows, had juice, didn't take out a swing point, though, and that's a big heads up, man. And today it's acting just like the markets are acting. It gets up to 74.91, and someone's selling the heck out of it. So
all the fundamentals are against oil and against ExxonMobil here. The problem is the Middle East. You never know what news is coming out of there. In the next 24 to hours to 3 months, and that's the risk premium on crude oil was destroyed on August 24th, and then the market kind of woke up and realized that there's a proxy war between the Saudis and Yemen, and across the border from Yemen, there are huge oil production facilities, and there's a lot of discord in OPEC. And there's a lot going on in that oil world right now.
Man.
And I think volatility, we're going to see volatility. I think you'll be able to trade oil at 40 and 50. I mean, it's going to be, up and down like crazy.
Yeah, well, and our man Dave from Clearwater, we start talking natural gas. I'm sure you got this.
I wanted to talk that next.
That's pretty heavy, man. This is, congratulations, Dave, by the way. He had called yesterday, man. He just loved that setup. It was like, wow.
Let me tell you, forget about technical. The technicals are working here in natural gas. I think forget about them in oil, because it's all fundamentals and politics. But in natural gas, they're working beautifully. So what do? We went a little bit below the support level, and we bounced brutally. And we bounced on a day where the EIA put out bearish inventory numbers. The injection was 94 billion cubic feet today.
Which is intense, I know, man.
Was very big number. And you know what? It's done exactly what I thought it would do. I mean, There is 12 of the last 15 years, natural gas has moved higher in September and October than it was in August. And I think it's going to do that again this year. I think it's going to go through $3 and surprise everyone. You have a setup here that's beautiful. You have open interest way down here, Tom.
Okay.
There's no one in these markets. The market is oversold here.
Yeah.
And it's turning. So this market looks like it wants to break out of the range. We keep trying this downside, but even when bearish numbers come out, they can't drive it down.
Well, that's a real positive today, for sure. What you have, folks, is, as Andy said, you had a build that was over what they thought, right? So they're saying they have more supply, but guess what? Oil and gas went up versus down, right?
Back.
Cool, man. You stay right there, all right?
Sure.
Andy and I are coming right back, folks. Our phone number is 877-927-6648. Right now, you get the Dow up 7, Nasdaq's down 11, S&P's are flat. There's going to be a major failure out here in the broad markets today. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 7. You get the Nasdaq down 12. S&Ps are flat, and you're going to see a major failure coming into the this close out here, folks. Dow had been up $200, and it's very well going to be in the red. They're all look like they're going to be in the red. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And he's got a great show. It comes up right after me today, 5 to 6 Eastern Standard Time. Yeah, so
I'll tell you what really bugged me today. I hated the action in silver today.
Yeah, let's go take a look at that.
Take a look at that. It looks like
I love the action in it this morning.
Yeah, no. I mean, it looked like it was going to go. That was an abject failure in silver today. It just kind of faded away.
Yeah, it did. It did. What we had here, folks, is this. Well, at least it stayed at 66. Okay, so let's take a look at this. So the number that I wanted to stay over, Andy, is the 1442. You know, you got to 1495 out here today, folks, which is really sweet. But guess what? It gave it up on price. So it's like, oh man, okay, that's a problem. Yeah. You know, you know, bottom line, looks to me that they haven't been able to break it down yet. Now, I'm talking about the gold market. Tomorrow is going to get intriguing, no doubt, because we have Friday. You get a long weekend. China's closed. Bottom line, though, even with China being closed, folks, is that the futures will open Sunday night at 6 o'clock. Believe they will. I got to check on that, man. Larry said they will, but I'm not quite sure whether they open Sunday night or Monday night. Andy.
I'm sorry, are you there, Tom?
Yeah.
Oh, I don't know if they close Sunday night. I'm sorry, I got millions of things going on. Yeah, I'm so sorry. I was talking in the den, too.
Oh, great. No, great. You got 30,000 people listening on the air, and you're talking in the den.
I'm sorry about that. No. Lots of stuff going on this weekend. Certainly, we got China will come back on Sunday night. And you know what, Tom? When China comes back, these markets are going to start moving again. I think that you're right. I think that the stock market is going to have a very ugly close today. I think tomorrow you'll be like kind of flatline. Do you expect?
I don't think so. I think it's going to, you know, see this market, man, has been pretty wild, and it would make sense that it goes flatten out and all that, but it's not. It's not happening. Like the spike today, you know, you get the spike, you give it up. To me, it's like, man, tomorrow can be nasty, man. You know, and I know it shouldn't be, you know, but guess what? You know, I just don't think you have the impetus from China that's gonna drive it. Listen, I'm so glad you just said that. Okay, perfect. Okay, because that's the hilarious. To me, that's the most. China, to me, is not driving this market. Okay, we've been up on light volume for 2 years. Okay, this is a, you know. This is a market, to me, that, listen, man, you know, you've been up for 6 years straight. It's just it's a correction. Big deal. You know, Leon Cooperman today, folks. So check this out. This is really cool, Andy, if you haven't seen this article yet. This is a trip, folks. So Leon Cooperman, you know, a lot of respect for the guy. I mean, he runs a great fund. Now, all these funds are down like 5 to 6% in August. So they're all flipped out. Do you know what he's blaming? He's blaming
high-frequency traders.
No, he's blaming Ray Dalio. Is that his name? He's blaming him from Bridgewater. Well, he has the high-frequency traders in there, but he's blaming Bridgewater because he's calling it is that a firm like Bridgewater, and Bridgewater is widely successful, folks, okay, is that he's saying that they have so many different trades on, right? That when one correlation goes, another correlation goes, and so that is what's screwing everything up. I was reading this article, and I'm saying to myself, "Oh my God, they'll blame anything." Do you know what I'm saying?
It sounds like someone to me who's losing money, who's just trying to blame others.
No, totally. That's it. That's it. There's no.
I mean, he's having a tough year. Cooperman, you know, I mean, look, he's having a tough year overall, but he should keep his mouth shut.
Yeah, it was just funny reading it, man. It was like, wow, this is pretty intense, man. That you actually, you know, anyway, you know.
It's, you know, look, Leon Cooperman's been very successful for many years.
Oh, big time. Listen, man, they'll always come back. It just, I guess, hey, you know what was cool, folks? This morning, this was pretty cool. This morning, Fisher, who used to be the Dallas Fed president, who was always conservative, meaning he always wanted tight money, right? Mm-hmm. They had a phone interview on CNBC, and Scott Wapner was asking him about Bill Gross, okay? And, you know, Gross came out with an article yesterday, folks, saying that, you know, the Fed should have went up, you know, a long time ago. And, you know, and it was so cool hearing this, okay? Because, so Fisher comes back at him, Andy and folks, right? And says, hey, listen, man, you know, he's pushing his book. Right?
Right, of course.
And that's the last thing that CNBC wants to hear, folks, because that's what it is. And so they didn't. And so he went back and again. He says, well, of course he said it. He says, listen, I respect Bill, but he's pushing his book. That's what he does, and he's very good at it. It was like, oh my.
That's pretty funny. By the way, I do think the Fed should raise rates in September. Because I think that, you know what, they're managing the U.S. economy. They're not managing the global economy. And other than inflation, everything says that rates should go up 25 basis points. So if they don't do it, they look like the boy who cried wolf. You know what I mean? They really should. Now, I'm not sure they will. I think there's the odds are they won't, and they'll kick the can down the road. But 25 basis points on the Fed funds rate is kind of like, you know, tiny amount. It's symbolic. They really, central banks need to carry through on their promises because that's the way they build credibility. You know, if they don't do it and they kick it to December, they'll have to do it in December, or they'll have a lot of fingers pointed at them. I think it's going to be very interesting, and I think that's what's going to cause big volatility, the conjecture between that, starting when we come back from Labor Day, that and China together.
I suspect, Andy, that by the time the Fed meets on September 14th or 15th, they're going to have to go into negative rates because the market's going to be down another 1,000 points.
They're not going to lower rates, Tom.
I'm only kidding.
Only Draghi's going negative. Draghi's got no choice.
Listen, man. I just don't see them lowering them. I agree with what you're saying, by the way. Okay, I just don't see it happening because the market itself, I suspect, by that time will be down another 1,000 points. And you know, they're running scared dogs, man. That's the bottom line. You know?
Listen, I'm with you. I'm bearish on the stock market. Timing is really tough here. You know, listen. What I'm seeing in crude oil here is, I think, is what you're going to see in the stock market too. You're going to see some wild swings in these markets. So
well, the stock market started it. I mean, we're having some beautiful swings in the S&Ps, man. I mean,
well, the stock market, absolutely having beautiful swings here. But I think they're going to get bigger. You know, after Labor Day and into October and for the rest of the year, I think we're going to see. You know, I think that what we saw on August 24th. That 1,100 point down move in the Dow on the opening in the first minutes. That's kind of that was the opening serve. And I think we have
there's no doubt.
Tennis to play, you know?
What you're hearing off, Andy, is this, folks, okay? And this is where it's totally different than, now you got to stay.
I'll stay.
We got to talk about this because this part of the conversation, folks, is really a cool part of the conversation. Andy Heck, Tom O'Brien, you stay right there, folks. We're going to be coming right back. Dow right now is down 23. Nasdaq's off 24. S&Ps are down 350. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Andy Heck, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, today, every Tuesday, every Thursday, Andy's got a great show. 5 to 6 Eastern Standard Time. Get it right on your cell phone, tfnn.mobi. Andy and I were just talking about, he was explaining that, the first day of volatility is not going to be the end. And it's so cool, man, because what you're hearing, folks, is this. When volatility comes in the market, it doesn't come in for one day. And, it blows my mind when, folks are out there saying, oh, that was volatile, but markets are going to calm down. It just doesn't work that way, man. It just
no, that wasn't a one-off.
Right.
that was kind of the opening salvo, and I think and it came, it actually came earlier than I thought it would.
Oh, I agree. And listen, this is fast. I mean, it was fast, man. I mean, it was fast and furious, folks. That volatility there actually came like it came in 1999 and 2000. It was, it was that. Well, and what I mean by that, it wasn't the day. It was like a 3-day deal, and that's how it came in 99 and 2000. You know what I mean? 2007 was different. It came, but it was a different take. They're always different.
The market can be kind of sadistic for that buy and hold crowd. It'll do what it did on Monday, and then it'll lull them to a false sense of security for a while, and then all of a sudden, out of clear blue sky, boom, it happens again.
Well, what this just did, and we know it does it for both sides of the market, the bulls and the bears. There's no doubt, folks.
Yes,
there's no doubt. Yeah.
No doubt about that. That is for sure. Actually, markets, I don't care what market it is, Tom. What I've found over the last 30 years is they like to inflict the most pain on the largest positions.
Hey, the bottom line is that I come up with that quote. The market's job is to take the most amount of money away from the most amount of people in the least amount of time. And it's the best mechanism I've seen that has ever done that.
And by the way, Tom, and for that principle, there's no place that it's more true than in commodities.
Yeah, no, that's intense.
Because look at what happened in oil. You had the whole world bearish. You had guys on TV calling for $30, $20, $10 oil, zero oil. And then in 4 sessions, the thing rallied 30% in their face. So perfect example of the kinds of moves that we can expect in all of these markets with all of the craziness going on in the world.
Yeah, I know. Here, let's, I think we still got Ken from Kansas. Ken, you there?
Oh.
Hello? No, I guess he's not there. Go ahead.
Yeah.
No, go ahead.
I wanted to show you one other thing. I wanted to show you there was one market today that had a really interesting day in the world of commodities, and that was sugar.
Oh, yeah.
Take a look at the sugar market. Hey, up on big volume.
Yeah, and sugar, folks, let's see. So we did 123,000 contracts. You're trading at 11 cents, 11.34. Yeah, you get some action, man.
Got some action. By the way, that's just in the front month. I think we did about 286,000 contracts across all months, which is the biggest day in quite some time. Let me see where I have to go back to. We did on June 11th. We did 305,000 contracts, but.
And folks, if you're taking a look at that sugar market and not in the futures market, don't forget I had Sal on yesterday from T-Cream Funds, and CANE. That's an ETF. It's an ETF that trades the sugar. What was so cool when I was talking to Sal too, Andy, is that it's important. Okay, so let's go back to the sugar market for a second, because this is what's important in the aspect. It trades, and it will trade the whole time the New York Stock Exchange is open. But if you're putting in larger orders, what you want to make sure is that you're trading that vehicle when, in fact, the sugar market is open. So that market is open till 1 o'clock in the afternoon, or 12. No, 2. Yeah.
Right. And I think it's 1.
It's 1. It's 1. It's 1. I got it right in front of me. It's 1.
The one thing you want to be really careful about there, and I love that cane product, and I like all the Tucrium products. What you really don't want to do is put stops in those products in off hours from trading.
No, totally.
That's when you can really get clipped.
And he was explaining, do not put a market on it, not even close, right?
Exactly, and especially in off hours, because all the bulk of the liquidity are the arbitrageurs. The people that Leon Cooperman was whining about in that article, who are trading these commodities also. Against the ETFs.
Totally. We get Ken back. Let's go to Ken.
Good.
Hey, Ken, what's going on? Ken.
Hello.
Hey, what's happening?
Hey, glad a hold of you here.
How you been, man?
I'm doing great. How are you guys doing? Good to get a hold of two great minds on TFNN together.
With a third great mind, you.
Yeah, right. I'm wondering about this UWTI and UGAS. I see on the internet today that they're going to have a reverse split, and I'm just wondering how that's going to affect it, and also get your outlook on the two of them.
That's a great question, and I saw that last night, and I put it in my newsletter today. The UWTI is reverse splitting 10 for 1,
which would make sense, yeah.
Right. I mean, it's driven down. It was 78 cents last week, and then it popped up to about $1.30.
Right.
The UGAS also a reverse split 5 for 1, and this is as of September 10th. I never like when these ETN products do these reverse splits. I never like the action in them. It's always kind of a negative for me overall, but they are reflective of what's going on in these markets. We should never really holding them for long periods is tough.
No, yeah, you don't supposed to listen. Okay, two different things happen here, folks. Okay, the UWTI is a 3 times long crude. Okay, these are daily investment vehicles. That's the bottom line. Now, that being said, what's so cool, Andy, is this. I'm telling you, I don't know the exact statistic on this, but when they do these reverse splits, right? And on all of them, that's when the major commodities themselves are basically turning. You know what I'm saying? Because they have to do they need this thing to trade over $1. Okay, so that's pretty neat, man. You know what I mean?
Right,
so.
Absolutely. I mean, listen, I've made the mistake of holding some of these things far too long, no question. Particularly that UGAS in terms of natural gas. But they are designed to be short-term trading products.
Yeah,
I like natural gas here very much, but I would be shifting into something like UNG, which is not going to have the same explosive power if nat gas rallies up to 330, but it certainly will participate in the rally. As far as the UWTI, hey, I'll continue to trade that on a daily basis rather than go into that crude oil futures market. But if I was sitting on a long position here from a couple of weeks ago, I might probably, if I had some money in it, to get out of it today because, I never like these reverse splits.
No doubt. Hey, Ken, thanks for calling. Really appreciate it, man. Andy, thank you so much, man.
My pleasure.
That bell's going to be hitting any minute. We look forward to your show at 5 o'clock, man, okay?
Take care, bud.
Have a great one. Have a safe one. Dow right now, folks, is up 24. You get the NASDAQ down 13. S&Ps are up 2. And you're going to see basically a bottom line. You get a major failure right across all the indices. They went to a high. You get lighter volume. The rejected price. I suspect what you're going to have out here. Here we'll be back next hour anyway. But the bottom line is that whether we take the SPYs did all of there was 132 million. Those are going into 274. Couldn't hold price. The Qs Tuesday had done 12 million, folks, in the first hour. We're at 40 million right now. That couldn't hold price either. This is Tom O'Brien. This is TFNN. You stay right there. We'll be coming right back. And, you know, we're just talking volatility, folks. We're going to be talking with our man, Mr. Basil Chapman, coming up the next hour. He is going to be doing a workshop on the historical context of volatile markets. It's going to be a live event. You stay right there. Basil's coming up at 4:20.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Sorry about that. I thought that hour was over. Bottom line is that we got 9 minutes coming into the close out here. The Dow right now is up 18. You get the NASDAQ down 14. S&Ps are up $1.50. And as I was saying, you know, Andy and I, we were talking about volatility. And there's no doubt volatility is out here. It's out here in spades. As you come over to our website at TFNN, folks, you're going to see right in the carousel at the very top, the historical context of volatile markets, a live event. Our man, Mr. Basil Chapman, is going to be doing a live event for subscribers. That live event is going to be September 10th, 6 o'clock. It's going to be 6 to 7 o'clock. Bottom line, you can come over to our website. You can test drive Basil's newsletter. 30 days, absolutely free. You do the test drive, you're going to get a great newsletter, plus you'll get into the event. So check it out on the front page of TFNN.com. We take a look at the our markets right now as we come into this close, and this is how this is shaking out, folks. So if we take a look at the SPYs first, what you're going to see is this. The SPYs, we're going to do 135, so let's say we do 140 million. We're at 195.79. Bottom line is that you're going into 274. Yesterday, we did 160. You can see the correlation here. You come down. First, we come down on Tuesday with 256 million. You go up yesterday with 160. You go up today because we have a higher high today with 135. What does that mean? You get no buyers, folks. What does that mean? We giving up on price? It means it's going to go test the lower end of the range once again, which right now I'm not even saying the range is down at the bottom of the 24th. Just take the lows that were generated out here on Tuesday, which would be 190.73. We go take a look at the NDX 100. We'll use the Qs inside the NDX 100. The Qs right now are down 38. The Qs had come down on 73 million shares. Yesterday we did 43 million shares. We'll probably do about 43 million today. Couldn't hold price. Inside the NASDAQ composite, by the way, it's the IBB. Well, here, watch this. The IBB, it's not actually showing up inside the NDX 100 as the leaders, because the leader in the NDX 100 on the way down is Netflix. That's 430. Mylan Pharmaceuticals at $112. Staples is 31 cents, and Gilead is starting to show. That is showing up at 218. The IBB, however, is weak in a huge way. The IBB today traded to 349. It's at 339 now. It is coming into the low that was generated out here on the 1st is 331. And so you can see the high of that low was 340. It's the IBB. Now watch, if we go over to Amgen, AMGN, we take a look at Amgen. Amgen is down 251. You go take a look at Biogen. That's down 184. Celgene, CELG. Celgene is off 161, and Gilead is the leader on the way down. Bottom line is that you can see how that baby is shaking out. The inside the Dow Industrials, the strength versus the weakness inside the Dow. The strength today is Intel. That's up 55. IBM is up 212. Visa is up 97 cents, and Cisco is up 34. The weakness inside the Dow Industrials, Caterpillar, that's down 175. Apple's off 172. Johnson & Johnson's down 61, and Merck is down 9. You talk about inequity getting taken apart. Joy Global, this used to be the high flyer in an extraordinary way. This is down 325 today, trading at 1888. It has hit a low out here of 1770. This is going after its swing low of $14.30, which was the swing low of November 2008. This is Tom O'Brien. This is TFNN. You stay right there, folks. They're going to be coming right back. Dow Industrials are up 50. Nasdaq's down 8. S&Ps are up 5.5. Stay right there. We're coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Expect the best. Believe something good is going to happen, and it usually will. I'm telling you. Just think about it, folks. We're more powerful than we realize. Just put that thought process out there, and boom, here it comes. Market-wise, let's take a look at it out here. We have the Dow Industrials up 23, Nasdaq down 16, S&P's up $1.50. Major failure, folks, right across all the indices. Dow was up 200, S&Ps are up $20. Bottom line, what did you do? You went to a higher high, lighter volume, failed on price and volume. We're going back downtown. Gold contract down $8.70, traded at $1,124 an ounce. Silver flat at $14.66 after being up at $14.95. Couldn't hold price. Oil up 63, trading at $46.88 a barrel. Bonds 10-year up 8 ticks, 127.13. 30-year up 19 ticks at 154.19. The 10-year is inside the larger range. 30-year still needs some price spread in order to get up into that larger range. King dollar up 501 ticks at 96.34. And the mind blower about that, I believe it's 96.35. It has to hold. We'll go through that, though. It had volume, and this is on the minor swing point, not the major swing point, by the way, folks. Euro down 98, trading at 111. The yen off a quarter of a penny at 119.98. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the spies, folks, this is what you have. This is going to get really wild, folks. What's going to get so wild about this is going into a long holiday weekend. You have a market that is highly volatile. You have a market that went topside today, couldn't hold price, has lighter volume. You get a rejection of higher price and lighter volume. Now, what does that set up? That sets up a run to the lows that were generated out here on the 1st, which is Tuesday. You get the jobs number happening in the morning, and we have the long Labor Day celebration. You also have China closed. So you can't blame China. I'm not saying you personally. The press is going to have been blaming China for the downdraft. Bottom line, they can't blame China because China is closed until this coming Sunday night. So what do you have? Bottom line, the spies today go to 198.05. You have 145 million shares. You fail on price. Yesterday we did 160 million. Today we did 146. We went down on 256 on Tuesday, and I'm not even talking about the big day down on 507. Bottom line is that you failed. You're inside the bar, and this is the danger part. You're inside the bar of the 24th. That bar of the 24th, the disaster, when we went from the 197, to basically 190 price point. Bottom line, we're inside that bar. We're going to be making a run, and I expect, by the way, you're going to be making that run tomorrow. And normally what would end up happening is that coming into a Labor Day weekend, it'll be quiet. I expect coming into this Labor Day weekend tomorrow is not going to be quiet. The Qs. Same setup in the Qs. What the Qs have done is this. Got to a price point today of 105.02. Couldn't hold price. We had gone down on 73 million shares. Yesterday we went up on 43.9. Today did 44. Bottom line, couldn't hold price. And the culprit inside that, by the way, is the IBB. When the IBB goes south, folks, it cracks the NASDAQ very quickly. And this morning, you could see it. And this is where you want to really get your head wrapped around not only the different sectors, but the weighting structures inside those sectors. Because the S&Ps are up 20, and the NQs, which are the NASDAQ futures, were only up 20, and that makes zero sense. When the S&Ps are up 20, the NQs are up about 60 to 65. What that was all about was inside the IBB, it was weak. Well, the IBB basically dragged the NASDAQ down. NASDAQ dragged the rest of the indices down. The IBB closed at 338.64. That also is inside the 24th bar. That the low of the IBB on Tuesday was 331. Guess what? We're going to be at 331 tomorrow. More than likely, we'll break it. Now, the IBB, I expect tomorrow, is going to give us a huge amount of information. This is why. Friday, on a Labor Day weekend, you should do dramatically lighter volume. The IBB has volume of 2.2 million there at that low tomorrow. That low, period, that 331. If you break that low tomorrow with volume, that's a monster heads up. Because that is going to be so hard to do because of the fact you get a holiday weekend happening. Gold contract. What do we have with gold? Gold contract, it comes down. We have light volume. Price-wise, we're approaching a lower swing point. Didn't get to that swing point today. This will go after it tomorrow. That's the way it seems to be set up right now. Now, I don't. What we had with gold today is this: we got to 1121. The swing low that it's going after is 1116. We only did 102,000 contracts versus 207. So bottom line, it held, which is positive. I would have liked to see it hold price, meaning get up there at about 1130, which it was trading at one particular point. Silver, we take a look at the silver market, and what you have with silver is that silver had the move and then gave it up on the move, and it wasn't enough volume. So silver did get to the 1495. It's trading at 1466. The number to watch on silver is 1442. It's above that number, which is a good deal, but that is the number. Okay, now King Dollar. This is you really want to wrap your head around this one, because King Dollar, folks, bottom line, should have went to the moon today. And this is why. When Draghi came out this morning, the European Central Bank, he comes out saying, hey, listen, we're going to go after this quantitative easing till December of 2016. We are, right now, folks, what they were doing, they were buying 25% of every bond issue that was out there. Well, that was the max they could buy. And there's a lot more bonds in the United States than there is in Europe. Now they raised that to 33%. So bottom line, technically, fundamentally, that should weaken the euro. Well, guess what? The dollar, folks, couldn't even hold 96.35, and that's the swing point. That's a monster heads up, because that is not the major swing point. The major swing point on the dollar is 97.10. So that's telling me that we have a shot tomorrow, to not hold the 96.35, because we're not there right now. And, in fact, we very well may start backing down. So tomorrow, you can expect some fireworks out here extraordinaire. You know, the markets tonight in Asia, they're closed, so it's not going to be a big deal. It will be a big deal in Europe tomorrow morning that we couldn't hold price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming back with our man, Mr. Basil Chapman, because when we talk volatility, folks, okay, this couldn't be a better time. Our man, Mr. Basil Chapman, is going to be doing a workshop next Thursday night on volatility. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 23, Nasdaq down 16, S&P's down $1.50. And as we do each and every Thursday at 20 past the second hour, we have our man, Mr. Basil Chapman. Basil does a great show on TFNN, folks, every trading day, 11 to 12 Eastern Standard Time. Also has a great newsletter. Now, the newsletter is called The Opening Call. You can test drive this 30 days right now, absolutely free. The way you do it, you can come over to our website at TFNN, and normally I'd send you the newsletters, but guess what? As Andy and Heck and I, we were talking about volatility. Basil is going to be doing a workshop. He's doing a webinar. No matter where you are in the world, folks, okay, you can get this webinar. It's next Thursday night, 6 to 7 Eastern Standard Time. If you can't make it live, it'll be on your page for 30 days. You can test drive Basil's newsletter right here, right now. 30 days absolutely free, because this is for his subscribers. And the name of the workshop is The Historical Context of Volatile Markets. And we are in one volatile market. Basil Chapman, talk to me, brother.
Hi, Tom. How are you doing?
Doing great. Yourself?
Very well, thank you. So the chart I'm showing here, this is the daily chart of the Dow. And what I like to do is I like to make it as simple as possible. Sometimes it looks complex, but actually you can take just simple trend lines and you can produce certain things. And in this case, you can see a very clear, well-defined up channel. Well, it comes from the low of March of 2009, March the 6th, at 64.69 in the Dow, and that started a trend line that you could only draw in when you got to the low of October of 2011.
Okay.
And on the upside, if you took the high that was from January of the 8th of 2009, that produced, look at this beautiful channel. It's an exact channel. There is it's to the percentage, and what it does is it gives you a well-defined range. And I like to call this, I showed this in my webinar back in February on the similarities between the late 1920s and now. And I showed that this channel had a diagonal time cycle from the bottom to the top, the area that I call the repellent zone, the area where you start to push back and the price starts to come down. Well, you start to see shorter and shorter in this last period since April of last year, time cycles going to the top. And I gave this webinar, one of them that was when the Dow was at 18,181, 281, and then it went a little higher to 18,351 in May. Look, the cluster pattern that you get right at the top, look at all these patterns, and then all of a sudden you start coming down, and now we've broken this green dashed line, and the green dashed line every other time.
That's 2011, right? Is that?
This is right now. This is this Monday a week
we
ago.
haven't done it since 2011. That's
and we haven't done it correct. That's number one. Number two is that the degree and the speed with which we've come from 18,351 to 15,370 and then bounce back into this little range is something that's very important, and let me show you why. In this chart here, I've got the monthly VIX index. This is called the CBOE Volatility Index.
Okay.
I like to make it real simple. The higher it goes, the lower the stock market is probably going. You think of it as bonds. When bonds go higher, yields come down. When bonds go lower, yields go up. So this is almost the same thing. Look at the time cycle from that bank crisis back in 2002 in August. Come all the way down, make a cup formation, spiral up to the bank crisis of October of 2008 at 89.53, come all the way down to 10.28, and then Monday a week ago we spiked up to 53.29. So what's really important about this is that we're talking about the speed. Now, I know you like to look at volatility. I know that you like to look at when you start to go down, the speed of and kind of the ratio of going down is what you love to see because you've built up momentum. It's like the turbocharged motor to the downside. Well, what's happened here is we spiral to the upside, but look how quickly we've given back from 53 to the 25 area. So it's really important to be able to define a number of things, and that's what I'm going to go through. What can people do since we've now gone to an era of high volatility? We made that big arch formation in the Dow. What can you do to protect yourself? That's number one. What can you do to identify which sectors are probably the most volatile? But you know, we talk about volatility, and when we talk about volatility, most of the time we're thinking down, but actually volatility can be up as well. So one of the things we'll be looking at on the downside, I heard you talking, I think it was with Andy just a moment ago, about sugar. Well, that's volatile. Look at the way sugar just spiked today so sharply, and it's made a very quick move. So I want people to understand, don't volatility. I want them to be able to participate in it, as I've tried to have my subscribers do that. So we've had shorts and we've had different positions. Here's a beautiful scene of the S&P going all the way back to 1991. I could go back earlier, but I want you to show. Look at the beautiful channels that were made on the way from 435 back in 1994 to the March 2000 high of 1552. Look at the channel on the way down to the 768 low of October of 2002. Look at the beautiful channel on the way upside to the 1576 high of October 2007. Then back down very sharply to 666, but all it was a down channel. Now look what's happened. We've gone in the up channel of the S&P. You've made a turn at 2134 in May, and the S&P is now challenging this very important red trend line. So these are the things that I'll be talking about. I'll also be putting it together with things like Fibonacci. You were talking about the IBB. We've been talking about that for a long time. And I had a sell signal in the IBB. I spoke about the Elliott wave. I believe we made a fifth leg up to the upside. And they're both based on the Chap wave methodology in the monthly chart and in the Fibonacci. We should be making what I call a hat trick top in something as important as the iShares of the NASDAQ biotech sector. It coincides also with relative strength, which never confirmed at all. Those little E letters at the bottom, peak E and the relative strength, never went even close to the high that was made when the IBB made its high at 254, way before it went to the 400 level. So those are the things I'll be talking about. I'll be putting together with what happened in the 1929 top. Are there similarities? What about this particular chart here? This is a fascinating chart. If you've got a moment, I'll show you. Right here, I had shown this a long time ago. This is every 7 years, or approximately 7 years, there's a cycle that comes into play. Well, this is from 2007. You've gone a little bit higher, but if you take it from the low of 2009, you've got 2015 to 2016, and you've got a time match with the high that was made back in March of, this is the Dow, January of 2000 to the high that was made October of 2007. And this gray line over here, that tells you about the similarity. So I'm going to be trying to put this together in a very simple way to show how volatility expands, goes higher, as the market starts coming down. What happens when you all of a sudden, as we saw just recently, the volatility index did not move and the market was pulling back. And then all of a sudden, fund managers decide, uh-oh, this is not good. And you see them flood into the volatility index as a way of insuring themselves against the down move. And we saw that back on that past Monday. That's where we got this very big spike in the volatility index.
And folks,
so I just want to say it's going to be really interesting.
And the way you get into the workshop, folks, you have to be a subscriber of Basil's, but you can test drive it 30 days, absolutely free. Go to the front page of our website at TFNN. You can subscribe right now, 30 days free. Next September, a week from today, September 10th, Baz, have a
refund right
great
now.
one, safe one. Look forward to the show tomorrow.
Today,
Thanks very much,
tell if
Tom.
the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, when we talk the metals market, folks, what's going to get really intriguing here is this, is that you had the gold market held today. We need price spread in it, meaning on the way up and some more volume. Silver barely held. There's a story that's just coming across the tape right now, and this is really intriguing. And the reason it's intriguing is that India is one of the largest owners and buyers of gold. So check this out. This is pretty amazing. Those who say India's inflation woes are under control forgot to tell Mumbai's onion thieves. Prices of the vegetable, a staple of Indian diets, have almost doubled since July. So we're in September 3rd, doubled, leading to a series of weekly reported heists in recent weeks. One victim, Anaid Nan, had 750 kilos, which is 1,653 pounds of onions, snatched from underneath a top by his roadside stall in Mumbai last month. It's clearly because of the price surge, pointing to the 50-kilo sacks behind him. Otherwise, who is going to try to steal these big bags? And I got a picture of it. Here, I'll put this up if you're watching Tiger TV, because this is a heads up, man. This is a heads up, and this is why the folks in India, bottom line, do save in gold, the currencies, and wear it, do it, all of the above, because on a continual basis, the government is stealing their money through inflation. A double since July on onions, that's pretty intense, especially a food product, right? The rising likelihood of a rate cut in coming months would do nothing to lower household inflation expectations, which Central Governor flagged as a crucial part of his long-term fight to control prices. The biggest issue, which people tend to overlook, is the RBI's game plan. That's the central bank's game plan to actually bring inflation down to 4% over the next few years. One of the analysts we're talking about. Bottom line is that the analysts can talk all they want. What the folks understand is that if you have food that doubles in price and 60 days, you get a problem. Years of 9% price growth have left their mark on India. If they find the price of vegetables staying low, and they find the price of milk staying low, then they will say, yes, there is a change. And that in itself is going to be, that's a monster heads up, man. And, but picture this. It totally makes sense. For years, India has been one of the biggest buyers of gold. China overtook India about 2.5 years ago. And, we'll see where the whole thing does shake out. But you can see why that would happen. You're sitting there with one piece of paper versus a real piece of gold that you can't deflate. Bottom line, you know what that's all about. Okay, now let's look at these markets. So what do we have tomorrow morning, folks? You have the jobs numbers coming in. If you looked at the Challenger report out here today, bottom line, the jobs numbers should be pretty good. That being said, whether it comes in at 200,000, 180, 220, whatever that is, what I expect you're going to see is a sell down in the marketplace. Now, what's going to be so intriguing about this is that here, if we go, let me show you something. We'll go to Europe first, because Europe today. So our markets went like this. Well, first off, Europe, the CAC in France was up 2%, the DAX was up 2.6, and the FTSE was up 1.8. If we go over to the DAX first, and they were catching up, by the way, from our markets the prior day. If we go over to the DAX, it was up 269 bucks. Now, what the DAX had done is that the DAX was going right into the highs that were generated out here on the 27th. And, the volume wasn't bad. It went in there with 92 million. No, it went, I don't have the volume. I won't get it for another few hours. Okay. But bottom line is that the price spread wasn't bad. I suspect the 382. Oh, man, this is sick. So check this out. The swing high is 382. It went to 380. That's saying not much, because I would have liked to see the test. The FTSE up $1.10. You're at 61.94. And normally what would happen, folks, is that normally you'd have Asia open first, then Europe. I suspect with Europe even up today, and we'll get a heads up real early, like 4 o'clock Eastern Standard Time, 3:30 Eastern Standard Time, where Europe wants to trade out. Europe is opened on Monday. We're not open. Asia opens on Sunday night. If we go take a look at how Asia ended, you had the Hang Seng close at its lows. The Hang Seng closed not in the last night, the prior night, down 250 at 20,934. Let's put this on a weekly. You put this on a weekly, and where the Hang Seng wants to go test 20,811. That's 120 bucks down. Now that's the high of the low. The low is 19,430. So we'll see what exactly that can handle if the high holds. If I put this on a larger 10-year monthly, it's saying that the Hang Seng is going to 16,170. That is a monster number. Now, okay, so jobs numbers comes out. Bottom line, they're going to try to move the market one way or the other. You stop moving the market downtown, and if we ever get volume simultaneously, it's going to be really a whole different animal coming by next week. So here, I'm going to set up the bullish and the bearish setup for you, not for tomorrow, but for Tuesday. Because tomorrow, I suspect we're going downtown. What we don't know is what the volume characteristics is going to be. So if you're a bull, what you'd actually like to see is this. I'll put the SPY up so you can see how this correlation is. We did 150 million today. We did on Tuesday 256 million shares. The high of Tuesday is 194.77. Now, if you're a bull, I know this is deviant, but what you'd like to see is you see it go into the 194.77, and that's only 90 cents away, with lighter volume and reject that price. Because then what you have is that you have a rejection of the bar, you have lighter volume. That would be saying that, guess what? Couldn't bust it down. It's going to try to go bust it up, and then it's going to try to bust into the 199.83. That would be on Tuesday. That's your bullish scenario. Your bearish scenario goes like this. Your bearish scenario goes that you are working your way into the 194.77. You do have an expansion of volume. I certainly don't expect the expansion of volume of 256. If we ever get anything near 200, and you get into the bar. For the bears, you have to get into the bar, number one, meaning the bar is 4 points wide. It's 194.73 to 190.73. So you got to get into that bar a couple points. You need an expansion of volume from today. You certainly don't need the 250. That's the couple setups that will basically move markets on Tuesday. Because if you get into, so watch how this works. This is where this gets really wild. If we actually get into the bar from Tuesday, the high of that bar, that is going to take quite a bit. The reason being is that on the 25th, the day after we came down, the 195.45, which is only 20 cents lower than we are right now, should support the market in a certain way. I don't think it's going to. I'm just explaining to you, you bulls out there, look at those levels. Because if in fact it does support it right there, then you got action, then we'll try to get up into this 199. This is Tom O'Brien, this is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 23, NASDAQ down 16, S&P's are flat. We're going to right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks, and let's walk through this. Okay, we have China that is closed, but this is pretty wild. Watching what just came across the tape here. So, Alibaba, folks. Okay, huge IPO, huge number, all of the above. If we take a look at highs to lows inside Alibaba, when this thing came out, rocket ship. Extraordinaire. Bottom line, trades up to $95 like in a heartbeat. You're at 66 right now. Well, listen to this. Alibaba Group Holding Chairman Jack Ma and Vice Chairman Joseph Tai are planning to raise $2 billion. Now, check out what they're doing, though. This is intense. They're going to raise $2 billion as a margin loan against the stock that they own. The money raised is going to be used to fund their Blue Cat Pool Capital Limited, the family office set up of Alibaba, set up by Tai in order to basically get, I'm not sure what they're going to do inside the family office. The loan may be announced as early as this month after a lockup period of the stock owned by Ma and Tai expires on September 21st. No final decision has been made on this deal, and it still may fall through. Both men are billionaires with considerable stakes in Alibaba, which create a challenge in broadening their personal holdings without panicking Alibaba investors. Mr. Tai has said publicly on the last earnings call that he and Mr. Ma will not be selling shares at the lockup expiration. This may be their best way for diversifying their personal portfolio without breaking a promise. In the margin loan, a borrower secures a loan by pledging an asset and typically agrees to hand over cash to the lender if the value of the collateral declines. The lender can usually sell some of the collateral if the borrower is unable to post cash. Banks are keen to keep these deals because of the lucrative fees that are involved. So Ma's net worth is $29.4 billion. Tai's is $4.3. So and Tai, if it's $2 billion and each one of them are doing $1 billion, in Tai's case, that's pretty intense because that's 1/4 of the deal. Share financing is very common for founders and senior executives who hold such a strong belief in the future potential of their companies. Okay, so here now watch this. I want to show you something. I suspect this would be the way to do it. Yeah, Z in the den. Some things never change. Can you say? There's no doubt. The quickest way that, and the most amount of money that has most times has ever lost, folks, are doing this. Okay, you have a company that is doing well. What ends up happening is that the owners turn around, they margin to the yin yang. The stock goes down. The stock gets called out at the wrong time. They sell the stock into the marketplace, and that's it. Now, that being said, what they should do, yeah, see, you have options. What they should do is this, and you could put a collar on the stock, and the collar on the stock is a different ball game. But I guess because they're claiming that they wouldn't sell the stock, the collar would be a little bit different. What the collar would be is that stocks at $66.47, you could basically have the stock go delta neutral for a couple years, go on both sides of it. That'd cost you some good money inside the marketplace. But bottom line is that you know that you're out at $66.47. What if we take a look at the chart? Bottom line. Right now, this is at lows. This is, this has been a one-way deal. It's only traded since the September of last year. September of last year, it came out. No one got. Well, there's plenty of people that got the IPO, but they sold it ASAP. So it came out on the 18th of September. The share price was $68. Yet I believe it opened at 90. Let me just look at this. Yeah, $86.27. It shot up to, first it shot down to 77, hit a high of 95. That was in May, and then went one-way route. Now, you want to see something on a one-way route? Let me show you something. Because this was one of the biggest IPOs in the marketplace ever. And when you do an IPO, folks, the only folks that get large IPOs like this are the large funds. And I want to show you what the large funds did with it. If you happen to be looking at my screen right now, right, you're seeing some of the largest hedge funds in the world, and you're seeing what they did with what they have. They sold out extraordinaire. The biggest seller was Tiger Global Management. They had 6.5 million shares, sold them all. Next was Jennison Associates. They had 14 million. They've sold 5.3. Next was George Soros. He had 4.8 million. He sold 4.3. General Atlantic. They had 6.1. They sold 3.2. Thornburg had 3 million. They sold 4.8 million. They sold 4.1 million. They sold 2.8. Harbor Capital sold, they only sold 2 million out of 15 million. Fidelity, check out Fidelity. Fidelity had 3.9, 4. They had 5.9. They sold 1.7. So you can see the amount of selling that's being done. Now, that's the selling part. Let me show you the largest owners right now. So the largest owners right now happen to be Northern Cross. They have 11.2 million shares. BlackRock has 5.4. Mass Mutual has 12 million. That's a big owner. Goldman has 7 million. Renaissance Technology has 2 million. MFS has 3.7. If you want to see, so check this out. Okay, this is a big heads up. You know, I talked many times about where Fidelity goes, MFS goes, Wellington goes, and State Street goes. And if you want to see something that's amazing, and you get Mass General, Mass Mutual. These are all within. They used to be within a block of each other on State Street and Congress Street in Boston. So Mass Mutual has 12.5. MFS has 3.7. Wellington has 9.4. Now watch this. This is the kicker, because they all follow Fidelity. I got to find Fidelity again. 1 second. Because Fidelity already started selling. That's my point. 1 second. Where are you? I just had you. I got to start again. Okay. Because once Fidelity starts selling, folks, Fidelity is the elephant in the room. Always is the elephant in the room. And once Fidelity comes into your equity, oh, it's awesome. If Fidelity goes out of your equity, oh man, you got to watch out, because what you have, here it is right here. So Fidelity already starts selling. In the last filing, they sold 1.7 million out of the 3.9 that they have. What happens is this, is that when those large funds are selling, the next filing we won't get, let's see, September 30th. You won't get until almost November 3rd. No, November, be longer than that. November 14th. 45 days. It's 45 days after the filing. And the next quarter ends on September 30th. October, November, September, June, July, August, September, September 30th. So you won't get that for a while. But what does happen is this. On this filing right here, what you did have is that the other funds that I mentioned, well, they saw that Fidelity start selling. What ends up happening, they start selling. It's like, if the elephant's going to sell, folks, what ends up happening is that your probability is you better get out before they get out of the rest of it, because guess what? The market is never big enough for the amount of equities that wants to get sold. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Dow finished up 23. NASDAQ was down 16. S&Ps were flat. And if we do go take a look at the Exxon Mobils and the Chevrons of the world, folks, bottom line is that just let them be just now, because what you have is this. Oil market, nice expansion off the lows. Had the juice behind it. In fact, if we go look at the oil market first, what you're going to see is this. You came off those lows, had juice. The crude oil went from $37.75 on the 24th, straight up one way to $49, and had juice on the way. Nice volume behind it. What we did out here today is you tested that high volume spike. We didn't get to the high, but it's a decent test. Then it gave it up in spades. Now, so we got to 48, 42. We're at 46.71. What that sets up is this. That sets up, first off, a run to 43.21, which is a low of yesterday, and we'll see how that handles it. I suspect because of the volatility that we have here, this thing can get into the 40.47 again. Now, that being said, let's go over to the equities. If we go take a look at ExxonMobil, we take a look at Chevron. If you at the webinar that I had done for my subscribers, I was setting up Exxon for a buy in September, and it's not there yet. It's getting there though. It's close. What you want to do is this: Exxon, $66, August 24th. It goes up to 75. Today we tested that level with dramatically lighter volume. So now you're going to make it prove itself. What that sets up, I suspect we're going to pull back down into the 71.38 area and let it test it. Because if you break the $71.51 area, that was the low of September 1st, which was Tuesday. If you break that with volume, we'll go right to the very bottom of that, which is 66. And then that wouldn't be a buy. Why? Because you have an expansion of volume as you break a swing. If you have an expansion of volume when you break a swing, what you need is an additional sign of strength in the marketplace. Then that would mean you have to go up again with volume, because what Exxon has not done is taken a swing point out. And if I've learned anything over the course of years inside the marketplace, swing points are where the market talks, walks, and squawks. And what you can get a sign of strength coming off a bottom. But if it doesn't take a swing point out, guess what? It's not a strong signal. So you're going to have plenty of time on this baby. If we bring this back on a monthly basis, what you are going to see is that, we're into the bar of 2008. You're into that bar with a lot lighter volume, which is a positive, okay? But bottom line, make it prove itself. Chevron is set up the exact same way. Chevron is at 78.26, and, this thing can test the 75.38. Chevron actually looks to me like it's a little bit better setup. Tomorrow, the metals market are going to be challenged, no doubt. The dollar index had volume behind the move out here today. It took out that little swing point with volume. You're at 96.37 right now. That isn't where it closed. It closed at the 96.33. But bottom line is that we'll see how that 96.33 area holds. The dollar today should have been able to get to its swing point, the higher swing point. It just couldn't. And that's with Draghi coming out saying, listen, we're going to do more quantitative. Well, he didn't say we're doing more quantitative easing. What they have done is this, is that they're going to take up more of the supply of bonds. Before, they were constrained to the point they only could buy 25% of each bond issue. Now they can buy 33% of each bond issue. I think the game's up, folks. It really doesn't matter basically how much they're buying. The bottom line is that the selling is on in the marketplace. You stay right there, folks, because our man, Mr. Andy Heck's going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you're focused on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Everything you need is right inside you. Grab it, folks, and have a blast. Look forward to speaking it right here tomorrow. Go get him, folks.